As promised, here is the first update video on the Bounce Back Loan Scheme. In this video, I will update you on the exact low fixed interest rate to be charged for 6 years, other loans that can be switched into this loan scheme, changes to the CBIL's Coronavirus Business Interruption Scheme, some unique features for sole traders and partnerships. Firstly, can I thank you so much for your comments, support and sharing the previous video. I will link this video below if you missed that one, and there will be more videos coming over the weekend and on Monday and next week. If you hit the subscribe button, I'll update you when a new video is launched, and please feel free to share with your friends who are in business. Now, on Friday night, Rishi Sunak, the Chancellor, wrote to all of the banks to update them on the Business Bounce Back Loan Scheme. On Monday, Rishi Sunak announced the government's intention to launch this scheme. It's a brand new scheme, the Bounce Back Loan Scheme, BBLS for short. Yesterday, he wrote to the banks to clarify the approach to be taken to a number of matters relevant to the design and the operation of the Business Bounce Back Loan Scheme before its launch on Monday. So let's start. The obvious thing. What is the interest rate to be on the Business Bounce Back Loan Scheme? Well, as it's a 100% guaranteed loan scheme, the price of the Business Bounce Back Loan, BBLS, is critical to its success. The government and the banks want to ensure that the loans are affordable, accessible, and out there for people to use. So what will the rate be? Well, Rishi Sunak has analysed a range of data and come to a decision that it should be a fixed rate loan. It will be 0% for the first 12 months and 2.5%, yes, 2.5% fixed for 2 to 6 years. So that's a medium-term fixed rate loan for your business at 2.5%. The support of 50 lenders to provide these loans means it should be very accessible. Other good news. We like good news. The Bank of England will be giving lenders who take part in the Term Funding Scheme, another funding scheme available for SMEs, additional incentives to extend the term of their term funding scheme loans and to make it accessible and align with the 6-year term of the loans provided under the Business Bounce Back Scheme. So that's a different loan that they're effectively opening up to the same terms as the Business Bounce Back Loan Scheme. Now, the Prudential Regulatory Authority, the PRA, will also shortly be announcing that the banks who are subject to the UK leverage ratio, a ratio I often refer to about why the banks are not lending so much if you've watched some of my other videos, will be able to exclude the loans they provide under the BBLS from their leverage ratio, their exposure measure. Now, I'm guessing this is because the government has given a 100% guarantee. So they lend £1 out, you default, the government give them the £1 back. So the banks are no worse off. Now, Rishi Sunak, in his letter to the banks, has stated it's vital that all necessary action is taken to ensure that the benefits of this scheme and all other measures from the government and the regulators are passed straight through to business. So how does this sit with the existing legislation? Well, sole traders, partnerships, unincorporated structures, if you borrow more than £25,000, you would normally, if you borrow any money in a sole trader partnership and unincorporated structure, those loans would usually be subject to the Consumer Credit Act 1974. So that would slow the delivery down from the 24 hours from application to cash in the bank. So what the Treasury has done is it's over the weekend amending the regulatory framework so that if a loan is provided to a small business of £25,000 or less to a sole trader, unincorporated association or a partnership of fewer than 4 people, then under the Consumer Credit Act 1974, the CCA, it will not be regulated for the purposes of BBLS. Now, what does that mean for you? And why do you want it regulated by the Consumer Credit Act? Well, it's an act to protect you, the consumer, from mis-selling. Well, given that you're being given a £25,000 loan, 0% interest 12 months, 2.5% for years 2 to 6, and the government are providing a 100% guarantee, what have you got to lose? So are you going to be missold, or are you actually being given a gift horse? So it means it's going to be really beneficial for sole traders, partnerships and unincorporated businesses who apply for £25,000 or less, because they can get the funds in their account within the target 24 hours. Now, this will enable small businesses to access the loans quickly in the way that it's envisaged under BBLS. The protections for these loans around debt collection, recognising the importance of the protection of borrowers who experience difficulties, etc., will all still be protected. And this new legislation, or changes to legislation, will come into force on Monday the 4th of May, just in time for the launch of the scheme. So what happens if you've been successful for a coronavirus business interruption loan scheme loan? Well, that's a really great question, because what they've done is sort of gone, well, there's a bit of overlap here. So if you've applied for a coronavirus business interruption loan scheme loan, and the amount that you were awarded was £50,000 or less, you can apply to port that over to the terms of the BBLS. And the BBLS loan has a restriction that it's maximum of 25% of your turnover. Again, yet to be defined, but it's saying it's self-certified. So if it's self-certified, it's almost like a bit like the old Northern Rock mortgages that we know were very popular back in the day, pre-2008. So as you're going to be aware from my previous videos, businesses will be able to borrow up to £50,000 with the 25% turnover cap. In order to ensure that businesses have a clear understanding of the support available to them under the various loan guarantee schemes, the minimum facility size for term loans and overdraft under CBILs has now been raised to £50,001. That is to avoid confusion for businesses of overlap of the two schemes. So if you're applying for a CBILs loan, the minimum you can apply for is £50,001 from now on. And the BBLS scheme, the Business Bounce Back Loan Scheme, so many abbreviations, is anything from £2,000 up to £50,000. So if you've already won and received your award of a CBILS loan, and the interest rate that you were offered on that was greater than 2.5%, then you can apply to switch that from a CBILS to a BBLS loan over the next couple of months. There will be a process put in place. Don't panic, you're not having to pay anything today, and we'll do an update video in the future. Now, that basically means you've got a better chance of getting good fixed rate, low interest rate for a long term for your business to support it trading out of this lockdown period. Now, if your CBIL loan, your coronavirus business interruption loan scheme loan, has the higher rate, what better reason to swap? Now, the Chancellor wraps up his communication to the banks, his letter to the banks, saying, "I trust this provides you with the clarity needed to implement the Business Bounce Back Loan Scheme, and would like to thank you again for the vital role you are playing in supporting the economy at this time." So that's a complete U-turn on the 2008 situation that we encountered. I look forward to seeing the scheme rolled out from Monday to support businesses across the UK, the Right Honourable Rishi Sunak MP. Now, I'll be doing some more updates, and I'll certainly be doing an update on Monday after I've applied for my Business Bounce Back loan scheme and sharing with you what I've learned and how you can benefit from that. And I will be applying at 9 a.m. on Monday. So if you stay tuned, by probably 10 a.m, I'll have a video out on Monday. Hit the subscribe button. You'll get notified instantly it goes live on YouTube. And I look forward to updating you over the weekend as more information comes out from the banks who are now starting to prepare their materials. Thank you very much. See you soon. And there's links below to the previous video, and I look forward to seeing you soon.